Right, we back, and the topic is going to be about money. I already have it in my search. All right, so basically, IRAs and 401ks, like I said this week, I'm going to start touching on investments for retirement and planning things out. And to my surprise, you go to books, they actually have a good bit of books for you to go through, take a look at. Preview of this book. Actually, it's kind of weird. You can actually sit here and read the whole book on this site. There's the table of contents. Like I said, I'm just scrolling through. I can get all the information right here. And it says the book has 94 pages. It's page 3, 5, 9, 10. So that's skipping this 14, 15, 16, 17. Okay, so I was looking at one side. But basically, coming all the way down, okay, it stops at page 30. So you have every page available all the way to page 30 and gives you the breakdown of, the taxes between the account of IRAs, single, married, separate, filing separate, joint. Has a breakdown of the IRA deductions. Okay, so basically, let's get into it. When you're doing your research, I'm actually gonna probably show a video as well to go forth from this, but pretty much doing your research. Okay, so this is a video from Ted Benden. He is the starter, and they call him the father of the 401k. Now, he's explaining like small business getting 401k plans, and is it efficient for a company, to have 15 employees get a 401k plan. And I'll give my take on this towards the end, but I'm going to give you a brief summary of the video.
Really very well designed, and it's the one generally serving as a model for it. But probably one of the issues with it, however, is it's limited. It only has one model, and the expenses are still somewhat higher than what they need to be.
So basically, he's giving a structure that going into these companies who have less than 15 employees, to an extent, it's not really that beneficial, because you have to take into account that he's going to say that these 401k plans for small companies are complex. Now, you have a small company like a law firm or something like that, they benefit because they have, tons of revenue coming in, filtering through the company. But if you have somewhere like a barbershop, salon or something like that, they're limited to the money to, kind of work into this program, because, I've always said about it being complex for, companies to take advantage of it. But, it's like pros and cons. To a degree, it benefits the employees, but at what cost does it benefit the company? Unless the company, somewhat makes, millions on end, it's more beneficial for them then, because, like I said, the tax credits, breaking down. I'm quite sure they get tax breaks for having 401k plans for the employees, due to the fact that the company is, putting money in. And, like I say, the legal aspect of it is, a little bit more complex, because it's not just basically signing employees up. You're literally going into the market. So Vanguard is a big company that a lot of companies go through, because they take the stress off, doing paperwork and everything for you. And they pretty much limit it to doing all the, assigning and everything. And your base is more or less just giving the money just with your employee as a owner of a company. And the employee side is just, picking the right investment target to get into, whether it be, the S&P, the small business cap, or, different little, you know, ways to invest with Vanguard, and then you would literally have the company set aside funds and go forward from there. But like I say, same thing with payroll. A lot of companies use their banks, or they would use a payroll service, what was it, APD? Yeah, APD is a payroll service that, accounts all payrolls in the same process. They'll pay a company and they'll handle the proceedings of that. QuickBook has got into that too as well, to where, they're doing a service provider for payroll. So it all depends on the company and the legal aspect, to where, you know, you won't get sued for not knowing. That's why put your faith into these companies, these preparers, and they're giving you legal counsel on this. Even though to the point degree you supposed to be, checking behind them. But if you just don't know, you just don't know. And like I say, to a degree, you literally, or putting your trust into these businesses to incite for help towards, your legal, or your purpose of not knowing these legal processes, and putting faith in these companies to make things happen. But basically, getting back into the situation with the IRAs.
Need to be, in fact, quite a bit higher than they need to be.
So they should fix that. Are there other states that you think have kind of the banner plan?
You have the
catch-up
additional
provision,
5,
which you and I are subject to. We could play catch-up, but
sure. But there are many small businesses. When we get out of the professional environment, many of those businesses aren't owners making a couple $100,000. Okay, so a lower contribution limit makes sense to them, and so designs I've worked on are all IRA based. They don't have any fees, and the cost to participants can be as low as 0.05%.
And okay, I'm gonna actually pull out of this video, because hopefully this video do not get flagged for playing too much of this. But basically going into the charts. Oh, let's go back. All right, doing the numbers with the image. Okay, let's do a breakdown. All right, there goes from an IRA standpoint. So as you can see, this is pretty much self-explanatory. Individual retirement account and account, sponsored retirement account through your employer. And 401ks are more or less, through your company that you work for, you can benefit. Your IRAs are actually set up through you, set it up through your bank or whatever financial services, you provide to give you a hand. And it gives the breakdown of which, like I say, the verses and both, they're both building the wealth, tax advantages, and growth for the future. All right, let's go to the next one. All right. And why, why saving for retirement, and this one gives a breakdown, I guess, for the retirement of Florida. There's no state tax, 401k account. How do you build it? Security, pension, dealing with your home. A lot of people, and you see in the middle where they have tips and everything. But, the point of it is, when it gets down to it, your retirement is basically pretty much how you structure it. You literally can take the money, put it in a 401k plan, through your company where they do match. A lot of people don't take advantage of that situation. You know, if you can benefit, I had a family member that did that. He pretty much tried to max out as much as he could. And even though he didn't retire from the company, and all he did was took the money, rolled it over into an IRA when he left the company. Instead of just taking it out and get penalized, he took it, rolled it over to an IRA, and he started investing into the excuse me, he started investing into his IRA the same as which if he would have had to, do with his employer, but he didn't have the match. So in return, he still didn't get penalized. He can borrow off the money just like he did if he had the 401k plan set up through his company. So both, they're one and the same, but they're difference in the tax, you know, brackets and everything which you qualify for. And also, like I said, depending on if your employer is matching or giving you the sum to a certain degree of you investing into it. For the most part, I did a little research on this, and it's getting to the end of the video where I'm gonna say, when it really comes down to it, dealing with, companies giving you these breaks and all this, the kind of benefits, the 401k plan, and, to a degree, the IRA is more or less getting you investing into the market. Back in the 70s and everything, a lot of people wasn't really invested into the market heavily. So that was an option to get people, moving and getting busy, taking the responsibility of trying to say, well, you invest more into the market, you get a bigger return. And so, like I said, going into the stock market, you put so much in, you take a gamble, get so much back, or you lose a little. And going into the IRAs and 401ks, you investing in, but you're doing it into the major companies. You're not individually putting money into stocks and hoping and wishing for a bigger turnaround. The S&P, cap dealing with most of the smaller, most of the bigger companies, S&P 500, that actually deals with the top 500 companies. If you're not doing well in the S&P 500 as a company, you will be swapped out for another one that's giving you, more of an advantage. That's the whole thing, is to incite some type of growth within the S&P 500. So that's why people typically, without learning or knowing, you're going to invest into that. And like I said, dealing with your company who's giving you, matching and everything and so forth, you're better off, winning in that department to the point where, you might take a little loss in your pocket far as the side of the IRA if you're doing the same thing with the company's pay and your money, the company investment and your money that's put into there. You might take a loss, but not a big loss because, you're dealing with more of a chunk of money. And like I say, doing the research, knowing, pretty much how do you have in the structure of things. If you're investing, in something to give you a better turnaround, S&P is always a good thing. But to my degree, I would say between the IRA and the 401k, you have a better option of just investing in universal life insurance. With the universal life insurance, you got to understand. Okay, here's a chart for us, the universal life. Basically, putting into your universal life, right here, if we look at the guaranteed death benefits in the year. So basically, this chart was structured to someone get $805,000 towards the death benefit. But if you actually go to the last row, if you can see that at the very top, going down to the last row at 55, Uh, you're looking at total pay up insurance to the in year. You got almost 2,299 point 99,441. So basically, going into it, you're forever actually gaining money instead of losing. And in my opinion, going into the 401k, the IRA, investing, those are a great vehicle to get started. But if you actually had insurance during the crash, '08, a lot of people lost thousands of dollars. A lot of people lost hundreds of thousands. In my opinion, the life insurance, far as your whole life, preferably universal life, you won't lose. To a degree, you won't gain as much because the market is doing bad, but you won't lose money compared to having a IRA or 401k. When the market crash, your money goes with it, because basically that's just like the stock market. You're investing in the stock market. When the stock market goes bad, your investments in 401k IRA goes bad because it goes off the market. That's what you're invested in. Same applies to the life insurance, but this is a caveat. The life insurance is set up for you not to lose. You know, unless you have a term life, understand, unless you have a term life, within that term life, you live out the term, you don't get all the money. You get the cash value of it and NB. But dealing with a whole life or universal life, like I said, you have a term limit on that universal life. Once you live out a certain number of years in which that policy is set up, you can then go into the account and benefit by taking majority of the money out and only, having a certain amount to where you can pay back and also benefit to where on your timely demise that you will also, take advantage of the death policy in which it's structured. So with that being said, I'm gonna go ahead and jump off this. Once again, people do your homework. I'm just, randomly giving you the information in which I know personally, and for you to do your homework, talk to a financial advisor. Shout out to Alonzo. He can help you with that. And until next time, we here, we gone.